There's a moment every tax season where reality quietly taps people on the shoulder and says, hey, you might want to sit down. For a lot of Americans, that moment is coming right now. All through 2025, people worked extra hours with a very specific belief in their head. Overtime is tax-free now. They didn't pull that idea out of nowhere. It came from headlines, from politicians, from viral clips and confident coworkers saying, yeah, the government finally did something right. And on paper, it sounded incredible. Work more, keep more, win. But here's the uncomfortable truth that almost nobody realized until it was too late. What people thought they were getting and what the law actually delivers are very different things. Not because of corruption, not because of a scam, but because tax law is written in a language that most people never bother to translate. And when you don't translate it, your brain fills in the gaps with optimism. The guy who thought he cracked the code. Let me start with a real scenario that keeps popping up in different forms. A guy works a brutal year, takes extra shifts, says yes when everyone else says no. By December, he's logged around 300 hours of overtime. On paper, that overtime added roughly $13,000 to his gross pay. In his head, the math is already done. No taxes on overtime, he thinks. So that's basically 13 grand straight to me. Then tax season arrives. He sits down with a friend who prepares taxes for a living. They pull up the pay stub. They run the numbers. And instead of $13,000 coming back, the actual increase in his refund is closer to 2 grand. Not 10, not 8, not even 5. About $1,900. That's usually the moment where people get angry. They assume someone cheated them. They assume the government lied. They assume the whole thing was fake. But here's the part nobody likes hearing. The law worked exactly as written. People just misunderstood what it actually said. The headline versus the mechanism. The phrase that caused all of this confusion was simple. No taxes on overtime. That phrase is powerful. It's emotional. It's easy to understand. And it's also wildly incomplete. Because the law never said overtime pay itself was completely tax-free. What it said, in boring legal language, is that a specific portion of overtime pay qualifies for a deduction. That distinction matters more than people realize. If you don't understand the difference between pay, deductions, credits, and marginal tax rates, your brain will confidently lie to you. And that's exactly what happened to millions of workers. The mental shortcut that cost people thousands. Human brains love shortcuts. They hate nuance. So when people heard no taxes on overtime, their internal calculator did this. Overtime, pay times hours worked equals money I keep. No brackets, no deductions, no fine print, just vibes. And once that number forms in your head, it becomes anchored. Psychologically, it feels locked in. That's why the disappointment hurts so much later. Not because the refund is small, but because it's smaller than the story you told yourself for an entire year. The sandwich rule, the part nobody explained. Here's the cleanest way to understand what actually happened. Think of overtime pay as a 2-layer sandwich. The bottom layer is your regular hourly wage. The top layer is the overtime premium, the extra half that turns time into time and a half. Only one of those layers gets special tax treatment. The government didn't say, we won't tax the whole sandwich. They said, we won't tax the extra layer. That's it. If you make $30 an hour, your regular pay is $30. Your overtime rate is $45. The premium is $15. That $15 is the part that qualifies for the deduction. The other $30 is treated like normal income because it is normal income. Most people assumed the entire $45 was special. It isn't. Why payroll didn't change and why that matters. There's another reason people didn't catch this sooner. Even after the law went into effect, most paychecks looked exactly the same. Taxes were still being withheld. Nothing magically changed in real time. Why? Because payroll systems are ancient. They move slowly, and employers don't like guessing when the IRS is involved. So instead of adjusting withholding mid-year, most companies did the safest thing. They withheld as if nothing had changed. That means the money didn't disappear. It just got parked, sitting inside the system, waiting for you to claim it correctly. And here's the catch. The IRS doesn't automatically figure this out for you. You have to know what you're doing when you file. The first big mistake people make. Most people assume that if they earn $10,000 in overtime, they can deduct $10,000. That's wrong. What they can deduct is overtime hours times premium portion only. If you worked 100 overtime hours, overtime pay might show $4,500 on your W-2, but the deductible portion might only be $1,500. That gap alone catches people off guard. But it gets worse, because even that $1,500 doesn't come back dollar for dollar. Deduction versus credit, where expectations collapse. This is the second misunderstanding, and it's the most expensive one. A tax credit reduces your tax bill directly. A tax deduction reduces your taxable income. Those are not the same thing. If you get a $1,000 credit, your tax bill drops by $1,000. If you get a $1,000 deduction, your savings depend on your tax bracket. If you're in the 22% bracket, a $1,000 deduction saves you about $220, not $1,000. Not even close. This is where the refund fantasy falls apart. People hear $1, $500 deduction. Their brain hears $1, $500 refund. Reality hears. Multiply that by your marginal rate. Why this is about psychology, not math. The math here isn't complicated. What's complicated is unlearning assumptions. People don't get burned because they're bad with numbers. They get burned because they build expectations on incomplete information and then emotionally commit to those expectations. They plan purchases. They justify extra work. They sacrifice time. And when reality shows up with a smaller number, it feels personal. But nothing was taken away. The promise just wasn't what people thought it was. What this video is really about. This isn't about saying overtime isn't worth it. It is. This isn't about saying the policy is bad. It's actually fairly reasonable. This is about closing the gap between what people expect and what actually happens. Because that gap between belief and reality is where financial stress lives. And in the next section, we're going to walk through exact real-world numbers, step by step, so you can see how this plays out on an actual tax return. Not a headline, not a tweet, not a vibe. If you're ready, say, the math everyone thinks they understand but doesn't. Let's slow this down and do what almost nobody actually does before tax season. Walk through the numbers in real life, not in theory. Because the confusion around overtime taxes doesn't come from complexity. It comes from people skipping steps. And when you skip steps in math, your conclusions are wrong, even if every individual number looks reasonable. A clean, realistic example. Let's build a scenario that mirrors what millions of people experienced in 2025. You're a single filer. You earned $100,000 total for the year. Out of that, $20,000 came from overtime. That already feels like a win. Most people stop thinking right there, but the tax system doesn't. Step 1. Taxable income is not your salary. The IRS never taxes your full paycheck. First, you subtract the standard deduction. For 2025, that's $15,750 for a single filer. So your taxable income isn't $100,000. It's $84,250. This matters because deductions, including the overtime one, come off the top of that number. Step 2. Understanding marginal tax rates, the part everyone messes up. Here's where brains melt. Your income is not taxed at one flat rate. It's stacked in layers. For 2025, that stack looks roughly like this for a single filer. First chunk is taxed at 10%. Next chunk at 12%. Everything above that at 22% until you hit the next bracket. When people say, I'm in the 22% bracket, they don't mean all their money is taxed at 22%. They mean the last dollars they earned are taxed at 22%. That distinction matters because deductions remove dollars from the top, not the bottom, where overtime fits into this stack. Now let's bring overtime back into the picture. Out of your $20,000 in overtime pay, not all of it is premium. Let's say your regular hourly rate was $40. Your overtime rate was $60. That means $40 equals regular pay. $20 equals premium. If you worked enough overtime hours to generate $20,000 total, the premium portion might be around $7,000. That $7,000 is the only part eligible for the overtime deduction, not the full $20,000, just the premium. What the deduction actually does. That $7,000 deduction reduces your taxable income, not your tax bill. So instead of being taxed on $84,250, you're taxed on $77,250. Since this money comes off the top, it avoids the 22% marginal rate. So what do you actually save? $7,000 times 22% equals $1,540. That's it. Not $7,000. Not $20,000. About $1,500. That's the number people weren't expecting. Why this still feels bad, even though it's logical. Here's the uncomfortable psychological truth. Most people don't feel disappointment based on outcomes. They feel disappointment based on differences from expectation. If someone told you up front, work overtime and you'll get an extra $1,500 back at tax time, you'd probably say, cool. But if you spent a year believing you were getting $20,000 tax-free, $1,500 feels insulting. The math didn't change. The story did. Payroll taxes didn't take a day off. There's another layer people forget about. Even with the overtime deduction, Social Security still applies. Medicare still applies. State income tax still applies in most states. Those systems do not care about this deduction. So when people say, I still paid a ton in taxes, they're not wrong. They just misunderstood which taxes were affected. The brutal reality for high overtime workers. This misunderstanding hits hardest for people who worked extreme overtime. Construction workers, nurses, manufacturing, logistics, first responders. People who didn't just pick up a few extra shifts, they rebuilt their lives around overtime. They missed holidays. They skipped family events. They burned themselves out, all while believing they were stacking tax-free money. But the deduction scales slowly. The more you work, the bigger the gap between effort and perceived reward becomes. Why this isn't a scam, even though it feels like one. Here's the part that's uncomfortable to admit. The policy itself is actually pretty reasonable. The government said, we'll give you a break on money that only exists because you worked extra. They didn't say, we'll exempt your normal wages just because you worked longer. From a policy perspective, that makes sense. From a messaging perspective, it was a disaster. The second shock, income phase-outs. Now I need to talk about the part that really blindsides people. Income limits. Because even if you understand everything so far, the sandwich, the deduction, the marginal rate, you can still get burned here. And this is where the law quietly starts taking the benefit away. How the phase-out actually works. For 2025, the overtime deduction starts shrinking at $150,000 for single filers, $300,000 for married filing jointly. It disappears completely at $275,000 single, $550,000 married. Between those numbers, the deduction fades out gradually. You lose $100 of deduction for every $1,000 over the threshold. That means higher earners who worked overtime get less benefit, not more. A phase-out example that hurts. Say you're single and made $200,000. That's $50,000 over the $150,000 threshold. The total phase-out range is $125,000. So your $50,000 divided by $125,000 equals 40% into the phase-out. If the maximum deduction is $12,500, 40% of that disappears. That's $5,000 gone. So even if you worked enough overtime to qualify for the full deduction, you're only allowed $7,500. Then you apply your marginal tax rate to that. The number keeps shrinking. Who the policy actually helps most. Ironically, the people who benefit the most are not high earners. It's people making $50,000, $60,000, $70,000. People using overtime to survive, not optimize. For them, no phase-out, lower expectations, cleaner math. For high earners, Overtime becomes emotionally expensive relative to the reward. Why this section matters. At this point, most people realize something uncomfortable. They didn't miscalculate by a little. They miscalculated by an order of magnitude. And in the next section, we're going to talk about the filing trap, where people either leave money on the table or claim the deduction wrong and get a letter from the IRS months later. Because understanding the math is one thing. Actually claiming it correctly is another.